This is the recap session for CMA US Part 1 Section A, in which we are going to cover about the financials reporting, which carries the 15% of the marks, which carries the 15% of the marks from the CMA exam. So the career opportunities for the CMA US is for the management accountant, finance controller, corporate treasurers, corporate controller, FP, uh, finalist and budget, internal auditor, risk compliance manager, CFO, finance consultant, cost accountant, auditor, and financial man planning manager. So these are the career opportunities when you finish your CMA. So today we will just talk about some basic thing which is for the accounting cycle. Accounting cycle start with generalizations. Then after generalization, we post to the ledger. Then ledger we adjust the whatever the monthly entry, recurring entry we need to adjust into the trial balance. After adjusting the trial balance, we prepare the adjusted trial balance, and then we prepare the financial statement. Once the financial statement is prepared and it is shared with the stakeholders, then we do the closing entries and prepare for the post closing trial balance. It means the new trial balance for the coming period. So when you say the financial statement, while you are preparing the financial statement, you prepare the P&L, income statement, balance sheet, cash flow statement of change in equity. Okay, and notes on accounts. So these are the things you need to prepare while you are preparing your financial statement. Now, you should know about the accounting equation. Accounting equation is means that asset is equal to liability plus owner's equity. It means that owner's equity is equal to assets minus liability. Liability means we are talking here the external liability. Owner's equity is the residual value for the business. So when you define the asset is like economic resources and then claim against those resources. So like asset is an economic resources which will create the value to the business. Now coming to the, let's we have some examples. So asset is equal to liability plus owner's equity. In the owner equity, we have a paid up capital plus retained earning is further break into the revenue and gain, then expense and losses, then dividend. So this is called the accounting equation. Now we have some example just to check. So we will take the three things. So in the accounting equation, when the asset increases, the liability, there is a asset increases, there is a liability decreases. So it means that if you receive the money, if you pay the money, so in that case what will happen, your asset will get decreased and then your liability will get decreased also. So in that case it is go in the same direction. Now we have the journal entry. Journal entry we will apply. We have a golden rule model. So golden rule says that there is a account can be classified into the three. First is the real, second is nominal, and third is personal. So personal account, in the personal account, what we do, debit the receiver, and credit the giver. But in real account, it means that what comes debit and what goes out credit. So what comes in, what goes out. And the nominal account, all expense and loss has to be debited. All expense and loss has to be debited, and income and gain has to be credited. So in this case, but this is the traditional approach. This is also called the golden rule of accountancy. But we will just understand the easiest way just to identify whether it is an asset, liability, equity, expense, or gain. So if you are able to understand the nature of expenses or nature of revenue, like if it is an asset, by debit it will increase and credit it will decrease, and the liability has the vice versa, credit it will increase and debit it will decrease, and the equity has the same impact, like credit is increase and debit is decrease. Now coming to the expense has the nature, debit is to be decreased and credit is to be debit has to be increased and credit has to be decreased. The revenue and gain has a credit has to be increased and debit has to be decreased. So this is the way to understand. So now we are taking some examples. So I will take the February one example. The corporation issued an additional capital of 10,000 shares to Harris Company in exchange of 150,000. So in that case, what will happen? Issue the authorized capital. So it means that this corporation has issued the capital and received the money. So it means that cash comes. So cash is an asset. So when you do the debit, it will increase, and there you need to record the liability. Here the liability nature is the representative personal account, it is the equity shareholder. So liability is getting increased in the books by 15,000, that also need to be credited. So very simple entry will be like cash debit to liability. So here the liability is presented as the equity share capital of 15,000. So this will actually be to the accounting. So there are some examples which you need to do it, and the corresponding entry is being there. So this is the table just to remind you that asset debit increase, credit decrease, liability. When there is a credit, there is an increase. When there is a debit, there is a decrease. Expense. When there is a debit, increase, credit decrease, and the liability and the income, credit increase and debit decrease. So this is the table which will help you for doing the entry. Now coming to the general ledger. General ledger is the posting of the general ledger, and each transaction generalized required to update in the general ledger. Once the transaction is done, that has to be posted to the ledger. So these are the examples for the journal which we have done previously. Now we will take some of the transaction bill and see the impact of ledger posting. So it means that we have paid, like taking the example of the nine property, paid 3,330 for the utility. It means that there is a two ledger is being involved here. So the first ledger is what? Utility. It means some electricity expenses, utilities, and the second ledger is cash. So you paid the 3,300. So let's try to check where is that entry. So this entry is here. It means cash that is directly recorded. Now coming to the expense ledger, that is the utility. So if you check the utility ledgers, so here got the utility ledger. So in the utility it is debited. So now you check how the posting is done. Now coming to the trial balance. Once everything is done, you summarize all the GLs to check the arithmetical accuracy in one place, and that is called the trial balance. Trial balance is checking the arithmetical accuracy of a transaction. Once it is done, then you need to pass some adjustment entry. You need to pass some adjustment entry. The adjustment entry will be like a prepaid deferrals, like prepaid and deferred expenses, and these are the entry which you need to take into your trial balance.